Okay, everybody, good morning. Happy Friday. As I've mentioned the last couple days, I'm going to be traveling next week, so won't be doing a stream for at least a week. At least not one with my nice home studio and chart engine, which I like as a kickstand. You know, if I'm going to pontificate about markets and trends and things, I just like to have hard figures to look at, as I think a lot of you know that follow. Anyway, this will be a quick one. A lot to do today before some travels, like I said. Just a couple points on Bitcoin, though, and a couple points on where we could go by the end of the year. So I'm going to put this chart up. And talked about this a lot. Go on log scale here. You can see kind of the craziness on linear, especially some of these bands of this rainbow. But here's my percentile analysis. A lot of Bitcoin data guys, which I like following, Cena, Plan C, Sminston, APSK, these guys. They have also done similar analyses. They've done some quantile percentile regressions, which are a little bit different than this. I'll show that in a second, but before confusing the picture, just remember that in the way that this is done, the bands are equidistant from each other based on a multiple of where price is over trend or under trend at that given time. And that multiple will remain the same. So you can see it in the tooltip. The 0th percentile for me is 0.1x the trend. The 100th percentile is 7.8x the trend. And that's it. That's what it is. And now the reason that, I've gone through some different iterations of showing this myself, but now that while I'm only showing this in sort of this jagged movement or, evolving movement in the past, and then nice predictive straight smooth lines in the future, and not doing like smooth lines all the way back, is because I want to show how it evolves, and I want to keep these multiples precise for at the time when the Bitcoin price went over or under the trend at the time. Okay, so just to remind you, the trend here in 2011 when we got to $35 for a day by the Mt. Gox hacking, first Mt. Gox hacking, or empty Gox, we should say, in June, because there was no Bitcoin there. There was Bitcoin there, but, little joke. In June 2011, this was a very fast trend. And so the all-time, look, I'm going to show the all-time trend here. That didn't exist, obviously, in 2010, 2011. If you can imagine, I don't have it on this chart, but the trend actually looks more like the yellow bands of this rainbow, the middle of the rainbow, okay? And then the trend flattened out, and then it went up again. So that's actually what the trend looked like at the time, and I'm sort of showing you the tangent of every, it's not exactly the tangent, but it's the development of the trend line based on each day's worth of data. All right, so just to remind you, that's why I have a lumpy sort of looking rainbow in the past and then smooth in the future. I've shown this a lot, and I've realized that sort of it's easier for people to project out if you have more detail above the 90th, okay? Because we've talked a lot about the 90th percentile, but you can see that if we look back in the past, there's a lot of action. Let's even just take out everything below. When price booms and adoption booms, let's bring the power trend back. Something above the 90th is actually where the peaks have been, even in 2021. Okay, so I want to show, and we can clearly see that the peaks are less, right? We're not getting to the 100th. We're not getting to that 7.8x as often. We did hit it in that 2011, and we did actually almost kiss it in 2013. We didn't quite make a new top, but it was basically almost the same. So that means the price at the time was 7.8x the power trend at the time. And then 2017 was clearly a little bit lower. 2021, clearly a little bit lower. So as we presume, a year or 2 years after the halving, year and a half after the halving, usually a boom starts. It doesn't mean it's going to happen again, but this is, the halving cycles of Bitcoin do play a part in all this. Hi, Roman. Good morning. Opium coffee. We'll be more detailed here. So yeah, we presume that the trend is going to happen to boom again. Not the trend, but the price is going to boom above the trend quite a bit at the end of 2025. So we need more detail between the 90th and the 100th percentile. So I've shown that here now. Okay, it's the same chart, but now we're going to forget everything below the 90th percentile. All right, you can see a lot. And let me take this back actually, just to show you funny on linear. So just look at number 9 on this chart. Still huge numbers, right? By 2033, $2.3 million Bitcoin at the 90th percentile. And here, that's the lowest value on this chart. Lowest. All right, so let's put it on log and see how it looks. All right. So again, all we're doing is just focusing in on basically the blank space between the 90th and the 100th here, because there's a lot of blank space. So let's see how it looked. Okay, so let's go back first and see how it looked. All right, obviously it's crazy days. Slashdot article here. Bitcoin jumped 10x from a penny to 10 cents in July 2010. A lot of coders got in then. First MT Goxing here. Crazy trends. All right. So the 90th is here, right? It's the lower band, and the 100th still remains. Okay, and it was the 100th was stamped back in 2011. This was precisely the moment that we went 7.8x the trend. It was $35 an ounce on a daily. Sorry, not an ounce. $35 a Bitcoin on a daily close. It was 7.x the trend at the time. Okay, and that means look at the all-time trend, man. Just to be clear, so the all-time trend now with all the data is 2, but back then it's only about 8 times smaller. Okay, so the all-time trend was something like a little over 4, 7.8x, roughly. Right, I'm just saying 8 times 4 is 32, something like that. It's a little bit between 4 and 5. Okay, was the actual trend. So the trend was somewhere between this black line and somewhere here, like I said. All right? The trend has evolved, and as I've always said, remember, the reason why it's such a strong curve for Bitcoin and should be very encouraging to you is that really from 2016 we just get on this pattern that looks like a beautiful power trend all the time. Okay. So that's the point. All right, but anyway, let's just go back and let's see. Let's zoom in. Let's zoom in here. All right, we're moving up to that top. So let's take off the 90th. We're clearly past that. The 91st, 92nd, 93rd, 94th. I know it gets a little bit hard to see with the yellow here, but this is the 95th, 96th, 97th, 98th. Let's look at the 99th. All right. This is why I like the multiple analysis. The 99th percentile, it means that 99% of the observations are below that penultimate red line, 4.7x. Okay, so 4.7x the trend, 4.7 times the trend is a 99 percentile event. It means 99% of the time it's not going to be that way. And then we hit 100th percentile, meaning this was the top ever, was 7.8x. Okay, so very, very rare. And even the fact that there's quite a bit of daylight between a 4.7 multiple and a 7.8 multiple shows you how rare it is, considering that these lines are taking into account 15 years worth of data. Okay. All right. So that's what it is. Now let's go to the double top in 2013. All right. Went up to 200, over 200, 250 bucks a Bitcoin, fell back down to 60. All right. And then we had that double top, two booms in 2013. And we don't quite hit that 7.8x multiple, but we're close at $1,128 per Bitcoin. See that if we'd really hit 7.8x the multiple, that would reflect a $1,171 per Bitcoin close price on November 29th. We didn't hit that. I'm sure we did on some exchanges, but just the data that I have. And the 99th percentile now, right, which is still that 4.7x multiple, we easily cleared that at least for a couple weeks. All right, from 18th of November, 2013, Latvia's Independence Day, November 18th, all the way to about December 16th. December 15th, we were over it and then fell. So about almost a full month. Almost a full month, we were above the 99th percentile. Bubble territory, boom territory. I know people don't like to use the word bubble in Bitcoin, but that's what it was. Okay, that's 2013. Now let's look at 2017. Now we got to put more trend lines here just to get more. Let's go back and do this again. Let's go back to the 90th. All right, the 90th, which is still rare. Remember, this is the 90th percentile move based on multiples. So 2x the trend is still rare. That's we're not there right now. We're under trend at the moment. We're under trend at the moment. We'll get there. Here's the 90th percentile. Hi, Cece, Sandro. Thank you. Good luck with mining the fiat. Hi, Gio. I'll be quick here today, so I'll try to not lecture too much, but just show the bands. Okay, so the 90th still actually was pretty rare in 2017. Let's see how long we crossed the 90th. Get a better zoom. All right. There we go. The 90th is 5460. We got over it here on October 13th, 2017, and sort of dipped back below that we bounced back above it in February. All right. And then we did go back, but we couldn't sustain it. But let's just say from the first jump to fall back below, something like February 5th. So October 13th, so November, December, January, February, almost 4 full months. Almost 4 full months, 3.5 months, let's say. Okay, so 3.5 months we were above 90. Then, of course, much less, 90, not much less, but a little bit less, 91, 92, 93, 94, the hard to see yellow lines, 96. Now we're at the 97th percentile, which is the 3.2x the trend. We hit that November 27th, fell back already in January. So January 17th, month and a half, almost 2 months. And it's about the same when we go all the way up to the top, but obviously a little bit less. To get above the 99th, all right, which is 4.7x the trend. December 6th, sort of back down, back up, but back down again. January 7th, a month. All right, so 1 month. But notice, let's just take it back down to, let's say, this multiple, the 97th. The true boom territory happened at around 3x, I would say, 3x. You could say here 2.8x the trend, but clearly this jump right here in mid-November to late January. All right, so 2.5 months. 2.5 months for a boom that was above roughly 3x the trend. Okay, so something to keep in mind. Thank you, Roman. Yeah, I don't know. I like interacting actually with you guys more, but just for my own sanity to get through this, I just want to make sure I don't make any mistakes. So let's put all the trend lines back now. The last boom, 2021, we had the double top, and remember, interestingly, a lot of the metrics, even my PSR metric, they catch the first boom. They don't really show much for the second boom, and then we had it. So just going to ignore that. And that fooled me as well. I didn't think that it was a double top because I didn't think double tops were that common, but it was. Okay, so the first main boom that really deviated from the trend, get above 90. Let's look how long we were above the 90th. We went up and back down, but we were above it from, so much data, it causes it to glitch a little bit. January 5th to, May 17th. January 5th to May 17th, 5 months. So a little bit longer, 2017, 3 months, something like that. And this is already 5 months above the 90th. That in itself is interesting. So it's longer. However, it's the amplitudes, I guess, are smaller, right? We're not even close to the 90th now. This is the point I wanted to show you of zooming in on these 90th to the 100th percentiles. Obviously, we're not going to hit that 7.8x the trend, 8x the trend, 4x the trend, not even close, 3x the trend. So let's actually go the other way now. 4x the trend we didn't do. 3.2x we didn't do. 2.8x we did. Okay, so 3.2x is here, 3.2x. But 2.8x we did. So really brass tacks, boom territory, top territory in 2021. And yes, it went back up again in November. So it was, threw everybody for a loop, at least me. We have this band here between the 90th and the 96th percentile, or between 2 and 2.8x the trend. It's more consolidated, more consistent numbers. Somewhere between 2 and 3x we had for 5 months. Between 2 to 3x the power trend was the price of Bitcoin for 5 months in 2021. Between 2 to 3x the power trend. That's what I want to get down to. And so let's keep these bands. And now let's just presume, obviously we're not having a March, April, May top or boom yet, because we're still under trend. All right, unfortunately, I think this is even 2 days late still. Yeah, it's the 25th as of this recording. This is the 23rd, whatever. This is about the price now. $93,000 Bitcoin. It's not going to change the all-time trend line barely at all. We're still actually pulling it down slightly because we're under it. That will soon change. But anyway, these are our numbers, I think. I think these are our numbers. You could argue that they're even lower, but I'm looking at 90th to the 96th percentile. Okay? So let's zoom it in. This is the question everybody wants to answer. Let's just go to the end of the year. And there it is. The trend 125, we've talked about that a lot. But 2 to 3x, 2 to 2.8x means $250,000 to $350,000. And I think that's as good a guess as any. What do you guys think? Thank you, RV. Yes, absolutely. Is fascinating, and it could break for sure. I think for sure this is showing signs of heaviness, right? We're not going to those crazy multiples, but that is what it is. Gio's got one here. You should worry about sailors building a corporate empire of digital gold, one that looks suspiciously like the system we were trying to escape. I've been saying that from the beginning, frankly. I mean, I've met them, whatever. I know Bitcoiners are into that, but clearly this is a politicized asset. It's going to be more politicized. He's got an empire of it. And his headquarters is in Tyson Corner. It's kind of interesting in DC. I mean, that's like where all of the corporate Washington think tanks, or not think tank, military firms, the industrial complex, military industrial complex is there, medical industrial complex. It's interesting. I don't think he's a psyop or anything. I just think that there's no question that his Bitcoin will get politicized at some point. So withdraw your coins. Withdraw your coins. Hi, Aaron. Aryan, thank you. Thank you. It's no longer censorship-resistant money. It's a corporate asset subject to SEC regulations. Yeah, that is the one thing I've been hounding. Like, the thing is, I ironically love the history of free banking and companies taking custody of assets. And, you know, we talked about this, right, in prior streams. Saylor's the best money printer there is. The free market can always print money better than the government. And I actually believe that. But the government's still there, and they're going to still try to regulate and do things that we might not want them to do. Let me show you one more thing here. It's got to be a quick one today, guys, as I've said. But, oops, let me pull this up. So here is my buddy Plan C, just to show you the difference. So this is the quantile model. Now, he has nice smooth curves, right? It's a little bit different. So in his model here, and he's been doing this with Cena for a while, the governor is the percentiles. Okay, that's why he can do this nice, smooth, beautiful model. These are not parallel lines. They are wider at the early end and narrower at the top end, narrower in the future. Wider earlier in the past, narrower in the future. That's why they can be smooth like that. And you can get these nice bands, nice smooth bands. I've just always liked this minor. The reason mine cannot be like that is because mine are parallel. They're based on consistent multiples. It's just two different ways of doing it. His looks more beautiful, 100%. But at least with mine, you can get that number. Whoops, this is the wrong one. I mean, this is the total one. But going back to here, we now have a number, right? That I think is, you know, I think it's pretty good. Every top has hit it. It's possible we don't even hit the number now. It's possible because we're getting heavier and heavier. But we have a number. And that number is 2 to 3x. It's 2 to 3x the trend. So that's why mine are a little bit lumpier looking than his, is that he's basing this purely on a sort of a mathematical of a percentile. And the percentile will always be the same. Like the 99th percentile will always be a smooth band, 70th, whatever. But I'm just saying the nice thing about mine is we can think in terms of multiples, over or under trend. So, and you couldn't do that. You could not do that here. Like, for example, here, the 99th percentile is probably like 7x the trend, like mine, 7, 8x. But here, the 99th percentile is still obviously over trend, but it's not 7x. It's probably like 4x or whatever it is, right? It's decreasing. It's adapting in a different way. Whereas mine is basically parallel, essentially, from the trend line always, the evolving trend. So that's why my multiples are, you know, I think you get the point. A little bit lumpy. Sorry, we're still on Sailor. Sailor's working overtime to make sure those keys end up in institutional custody. Yeah. Is he agent secret? I mean, there's been plenty of conspiracy theories, obviously, about there. And I don't think so, but I think he's clearly an institutionalized guy. And at some point, it probably will get politicized, his Bitcoin. Good quote. Revolution won't be institutionalized, but its coins might be. Geo. Roman. I plan to take some profits this cycle. Last cycle caught everyone off guard, being the real blow-off. Yeah. No real blow-off peak. I agree. It's probably going to be a surprise this time, too, though. That's the crazy thing. And maybe it's a surprise way to the upside. It's really hard to do that with Bitcoin, right? Roman on taking profits again. Geo, maybe every revolution eventually gets packaged, marketed, and sold back to the very system it once was meant to replace. That's a good quote. There's got to be some philosophy about that, some Roman philosophy, if not Greek. Maybe Sailor's the first one to figure out how the story always ends. I completely agree with this sentiment, actually. It's a great point. But yeah, this is where I think we're going. It's a nice band. It's a nice number in your head. 2 to 3x the multiple. The trend is going to be about 125K. That means 250 to 350, roughly. 250 to 325. Whoops. CC Sandro. Hope it's an intermediate step and the people encounter the asset on TradFi rails, but eventually realize that they get the full benefits of BTC and self-custody. Yeah. I think it's going to be that way for some, but just not all. Then the hope is that the rest aren't somehow enslaved. I don't think they will be, but there's also costs even to get on chain with Bitcoin. Roman asks about the future, 2030, 47. I don't think I go out this far here. On this one, I have past the second halving, 2 more halvings. So this, I can go out to 2033. And we got this. 1.1 million trend. 2.3 in the 90th. Let's say the conservative 90th. 3.2, 3.3 in the 96th. If you want to see the silly numbers, let's say 99th and 100th. Let's go there. It's a silly numbers. Plan B numbers. 99th and 100th, $5.4 million Bitcoin, and the 100th percentile, again, a 7.8x multiple over the trend line, $9 million Bitcoin by 2033. Yeah, precisely. One thing to say, though, is, and this is what people forget about this trend line analysis, which is cool, is, again, this is not set in stone. It adapts every day. And as we go through a period like this, where we spend from November 2020 to May 2022, all right, almost two full years above the trend, presuming we'll do that again. We're not even above it right now, just a little bit above it on the Trumpistan nominations or elections. If we stay above it for 2 years, that pulls this back up. It pulls the trend back up every day that it's above it. So it's almost like a self-correcting mechanism and further belief why I just don't see the hyper-Bitcoinization explode into the sun mania. It's more like that power growth of a network. Yeah. Never bad to hodl Bitcoin, I think. Aryan, liquidity outlook for 2025, please. Base money expansion, QE. Wonder if we get a traditional 4-year cycle. Lots of variables this time, yeah. I do think it's coming. We talked about that yesterday. But again, to reiterate the point from yesterday, this is 90% of it is this. It's the adoption curve. It's the power curve. I truly believe it. I guess I'm kind of in a unique perspective in this space. I've been tracking both now since 2018. And I think back in 2018, I didn't sort of see the consistency of the power curve. But now that it's, we're 6 years into it, actually 9 years into it, 9 years, because really from 2016, it got good. The power curve got good. The sort of graphical representation of the adoption of Bitcoin, I still think this is 90% of the story, regardless. But it is true, this boom right here coincided with a massive boom in liquidity. Whether it's broad money, base money, trading meme stocks, it absolutely did. And we are at a bottom out liquidity scenario of base money. I'm not Broad money is a little bit higher. It is definitely higher, actually. It's expanding in the US and everywhere. But the base money, which is analogous to Bitcoin, is at an all-time low of the trend, right? 25 trillion, where the trend is like close to 30 trillion. I think it will turn around. I don't know when, soon, within the next year, I think for sure. Trump obviously wants lower interest rates. Regardless, it's just what central banks do. They revert to the mean, they print, that's what they know. It's gonna reverse. If we have some other black swan, it will definitely reverse. They'll print more. But I think even without the black swan, if we sort of stay in this malaise and tariff wars, by the end of 2025, anyway, they'll start to drop rates again. My answer to your question is I still think it's 10% of the story. This is the story, 90% of the story here. What do we got, Roman? Yeah, a lot of people are saying this. I think institutional adoption changes things this time, less bear at least. Totally possible. You know, people thinking that maybe we ride the wave more consistently. Maybe we don't have as big of a boom. Maybe we don't have as big of a fall. So far, that story is correct. That story is 100% correct. I tend to think the markets go in these pendulums, and I don't know. To me, you're at least going to have something like this. You might not go up to the 96th. You might only go to the 90th. That's still 2x the trend, and I really think it's going to happen. I just don't see like a sort of nice power trend growth of the trend just kind of like hanging around, you know, this $100 a day growth, which is what it is. Remember, here it's growing. By 2027, it's growing $300, $325 by 2027. $100 now, growing up to $300. Also, good point, Gio. All right, guys, this is all I have time for today. I just want to show, I know you might not like, well, I don't know if people watching the stream right now don't like it because we're all in Europe mostly. Just want to comment on this as well. This is close to me. This was a tough thing to read yesterday from the strikes that happened 2 nights ago in Kyiv. You know, children dying, over 100 people injured again. I think it's highly likely that the U.S. walks away. That means risk goes way up for Eastern Europe. And just these words, like tweeting to a dictator, not necessary and very bad timing. Just the words not necessary, very bad timing. I like this young woman, Anna from Ukraine. If you don't follow her, please follow her. She said something really great. You know, it's like, could you just imagine Roosevelt saying to Hitler, not just Stalin, but to Hitler, not necessary. This is what we're dealing with. And you know I'm on the front lines. Not the front lines literally, but whatever happens, post-ceasefire, things go up exponentially more risk for the Baltics and Poland and Finland because rearmament starts and redeployment will start. It's crazy. It's crazy to think about. Thank you, guys. Thank you. I appreciate it. Just want to end it there. Slava Ukraine. Everybody have a good week next week. And, you know, I'll try to post some pictures and stuff. Pictures of charts. So thank you, guys. Take care. Talk soon.